All right, so here we got someone at CNBC saying that the market's gonna fall. This guy is named Rich Ross, and he's affiliated with CNBC. And he's saying the SPY is gonna be a good short trade. So you know what that means? It means that we should probably look into the opposite side of this trade and see if there's a reason to take that position and then take it if possible. Inverse CNBC is usually a profitable strategy. And what's amazing about it is that it also pays off in bull markets, despite the fact that CNBC is essentially perma bears, they're perma bulls. And we got a bit of an anomaly here because there's a guy who says that it's actually going to fall. Looking at the SPY, a lot of CNBC guys, by the way, even though they are perma bulls, they will say that you should be short. They'll suddenly switch the position and say that you should be short conveniently when the market is falling. So take a look at the line. I don't think it's actually falling that much, but it is down. So it's likely that these momentum traders will be saying we should be positioned for a downward movement. But let's look at his logic. And I think his logic is poor. So I'm going to be taking the opposite side of this trade. Now, let's just go through the basics and see what's going on here. Play. Come on.
Hi, this is Rich Ross of Evercore ISI. Today we're going to break down the spiders, the S&P benchmark ETF. Let's go to the chart here. Now what we see is that...
All right, elephant in the room. This guy's a robot. He's not human. He's some sort of robot or android. I don't really know the difference. Just wanted to get that out of the way.
This head and shoulders top that's been forming on those spiders. Here's that first shoulder. Here's shoulder number 2. That's your head. And there's that second shoulder that we alluded to. Now, importantly, we've erased all of those
So check out this very scientific trade. You see, that's like a head, and you see it on the sides, it looks like shoulders. Therefore, the market's gonna fall. Get it? Makes sense, right?
Brexit gains. And look at this. We can take this chart back a full year just about to...
Alright, so his theory is that we've got a support level here that he eyeballed and drew with a pen. And we got something that looks like shoulders, which is, is arbitrary. And, well, I hope you know that. Head and shoulders charts have never shown to be reliable. And that's because there's no definition for a head and shoulders chart. There's no statistical or database definition. It's all just eyeballing these charts. His support is also eyeballed. Support and resistance are actually decent. If you want a good support and resistance chart, you got to go to Stock TA. And what I like about Stock TA is that it's all automatic. No matter what ticker you put in there, they're going to automatically give you support and resistance here. And you don't need to do any eyeballing. It gives you the numbers on the side right here. So according to StockTA.com, we've only got really one strong support level, and it's actually a resistance right now because we're below that level. Now the support that Rich Robot is pointing out is that at 212, and I think it looks like we've already dropped below it. So his theory is that we're testing that, and we're going to break through it and then fall further. Again, it's kind of a baseless theory because it's really, once you take out the head and shoulders bullshit, you've got nothing except for we are close to the support. And if you are like a big bank who plays this quant model of swing trading, what you'd be doing is you'd be buying at the support. What Ross is doing is saying he's not going to buy at the support because he sees head and shoulders, which, by the way, we can't really see on this graph. It depends on the graph you draw, right? So here we don't see that head and shoulders that he drew up there. It depends on the frequency that you draw it. So every head and shoulders pattern is going to be different depending on the person, depending on the chart. It's just something you want to ignore. and it's a example of Doria. Doria. I actually forget the full name, but you guys like Doria? It's delicious, right? Who does not like it? Come on. Look at that cheese and rice. Oh man. What is it called? Pareidoria. Oh, I gotta find the English. Pareidoria. Let's find the English. And I'll explain this, and you will memorize it because it's very useful for real life. Pare. Whatever. There we go. Pareidoria. Pareidolia. Pareidolia. Check out these pictures here. Look at that. Look at all those things, those household appliances that have faces. Look how angry that typewriter is, man. Oh, that faucet, he's so sad. He wants to be filled with water. This church is a bird. There's a man on Mars. Unbelievable. What is that? That bag has a face, my god. That is one angry onion. Oh, look at this one. That security camera is going to shoot you. So, this whole thing is just the concept of our human brain evolving to the point where we see patterns where there are actually no patterns. So that is what, that is what convinced me that Rich Ross is not a robot, because a robot brain, well, I guess a robot brain could do overfitting and find patterns where they don't exist. Let's not speculate on whether Rich Ross is a human at this point. Let's just look at the fact that to him this looks like Head and Shoulders, and therefore he's going to make an irrational decision. Now, I really don't think that inverse this pattern is reasonable either, because his basis for shorting it is that we're near a support and the pattern says it's going to go down. I really don't want to inverse something absurd. I'd rather inverse a very incorrect logic. For example, if someone says earnings are going to go down, therefore this stock is going to go down, and I had a reason to believe that earnings are actually going to go up, then I would inverse that guy. I'm still going to inverse him just as a test. I'm going to just throw in a few $100 on a call option just to prove him wrong. So I'll be buying this option here, the 215. It's only $300. November 18th strike price on the SPY. I'll ride it. I'll ride it for 1 week, I guess. We'll see who's right after a week. Seasonally, though, if you check this out, here's the SPY and its seasonal patterns. Now, October is the beginning of the bullish season, and this is generally the time you want to start buying those undervalued, oversold tech stocks, small cap stocks. That's when you want to get in. He's saying go short at this time. So like I said, a lot of these CNBC guys are momentum traders. If you have a down month or a sequence of down months like we usually do, look at this. This is data going back 20 years. We usually have down months in October and September. So it's not uncommon to be sloping down in the SPY at this time. So if he's basing his momentum trade and then trying to if he's basing his short position on a momentum trade and he's justifying it with something that I can't even see in this chart, I guess there it is. I guess that's one shoulder. That's a very short head. What a weird looking person if that were to become a person. I think a lot of head and shoulders traders, I'm not even sure if they use that exclusively. I'd have to go back and check out what this guy's done in the past. But a lot of these guys, I think they already have their decision in mind. They've already come to the conclusion that they want to short the SPY, and they use that pattern to justify their decision. Whereas we use statistics, we use the mathematics. And the mathematics are saying, now it's probably a good time to go long on the SPY, not short. I'm not going to go either for the long term, but I am going to play the inverse CNBC game because I like doing it. It's fun for me, and it's only a couple $100. Who cares, right? Now, if you want to get in on this trade, I've run the candlestick analysis. Generally, the best time to get in is when the SPY opens at a high. So if we see, for example, today that the SPY opens at like 213. That's probably a good time to buy those calls and then ride through for a week. Sell on Friday the 21st. That would be the general plan. Now, if it doesn't open at a high, my stats show that if it's on a black day, you're probably going to see a bounce backward. So if you're going to trade it, if you're going to buy these calls at market close later in the day, it's good to buy on a black day, not a white day, because typically there's going to be a bounce back, no matter whether you're white or black. So based on what I see now, I think it's probably going to head down on Friday. But if that's true, what I'm going to do is at the end of Friday, I'm going to buy that call option you just saw, and I'm going to ride it upward for the week. We've probably hit a bottom. We've probably hit a support, albeit weak. And we're just going to inverse CNBC for kicks, for some fun. If you don't have a lot of money in your account, you don't want to play this game because this is just kind of like gambling. I don't really have a very good thesis besides the seasonality to go long on the SPY, and that's basically it. So if you found this helpful, if you like this kind of video, I noticed my last video where I pointed out I'm going on the opposite end of a popular trader. I noticed that some people like that video, more people than usual. So making it like a game or a competition, even though probably a lot of these people don't have skin in the game. I think actually Andrew Keene, the guy we looked at last time, I think he really does put his skin in the game. So he should get respect at least for that. I don't know about this robot guy. Pretty much anybody from CNBC I think is getting paid just to say whatever they're supposed to say. This guy is a technical analyst according to whatever Evercore is. So I mean, he's using the stuff that average Joe can use without having to do any research, without having to spend any time on studying technical analysis. All they have to do is look at the charts and think they've seen something. I mean, really, come on. Doesn't I mean, you could find Head and Shoulder. Isn't this like a Head and Shoulder? I don't even know. Wouldn't this be like a head? See, I don't even know how this works. It's all eyeballing. There's no threshold or numerical limit that the head has to be above the shoulders for you to consider that a head and shoulder. You just have to eyeball it. I don't think that's trustworthy. I don't think you want to put your investment or put your career on the line for such a arbitrary pattern. Again, that is paliadoria. Dolia. I guess it's an Italian word, I don't know. Japanese is easier to say than the English here. Anyway, don't be a victim of the bird church. If you like this video, subscribe, please, and like the video, and leave a comment for a similar video or request, doesn't matter. I will step up my frequency of videos if I get requests. Otherwise, it's just stuff I find, like this guy's video, that inspires me to do a video out of nowhere because I don't really have a schedule at this moment. Thank you. That's it. Stop.